Welcome back to Fast Market here on the TD Ameritrade Network. Let's bring in our next guest for our cash tag segment. That's going to be Megan Brantley, Vice President of Research at LikeFolio. Welcome back to the show, Megan.
Thanks for having me, guys. Happy Friday.
Happy Friday to you. We're talking Nordstrom, news overnight that an activist investor has taken a sizable interest in the company. He wants some changes on the board. But this stock, rallying 20% today, but at the same time, just coming off of lows. It's had a nice month so far. Do you have any data that backs up the rally that we saw prior to this news?
I think last quarter, Nordstrom had a pretty rough quarter. They ended up having to discount and mark down things because they saw a really a weakness forming, especially among lower earning consumers. And this is something that we've been tracking for a while. We've talked about the divergence in consumer base from, higher earners appearing more insulated from a lot of the inflationary pressures that we're seeing just in the economy today. And for Nordstrom, I think that probably the best news that we can say heading into 2023 is they at least proclaim to have their inventories, squared away and a clean slate. But the bad news is, at least from our data, is that we don't see a shift in consumer behavior in regard to kind of that deal searching mindset and a little bit of a pullback or intentional spending, especially among lower earning consumers. And we're not seeing any type of inflection point whenever it comes to overall consumer demand. So on this chart that you're looking at, you can see purchase intent mentions. They've really been on a yearly decline since 2020. And if we were to expand this chart even further back, honestly, this decline has kind of been playing out since 2018, whenever Nordstrom was really at its peak, at least in the minds of consumers. So this is something that we see weakness even in both brands. I know that Nordstrom Rack was more impacted in this last quarter, and we definitely see that in our data, but we're also seeing weakness in its flagship, upscale brand Nordstrom itself. So this is a little bit troubling, but mostly for us, it's just an indicator that Nordstrom, it's kind of lost some of its appeal that we used to see whenever consumers were looking for somewhere to shop, looking for that upscale department store experience. Some of that appears to be waning. We're not seeing any signs of a massive shift yet, or a turnaround, at least in terms of the company's execution. So we'll definitely be watching to see if any changes are implemented and if this does cause a shift in the consumer behavior. But so far, no real signs of improvement on our end.
Megan, this company posted lackluster holiday sales. They cut their full year guidance. This is a company that trades at a fraction of where it used to trade and can't seem to get any real momentum with the full price merchandise, with Nordstrom Rack, which everything they do, the online. But here's the thing, Megan, as much as it makes people uncomfortable, right? There's a Nordstrom that's CEO of the company. There's a Nordstrom that's president of the company. An activist investor, something to get this company in a 180 is probably needed right now, and I'm sure that's why stockholders are applauding this move, because this company needs to be shaken up, doesn't it, Megan?
No, 100%. Nordstrom used to be, whenever we talked about companies with the highest levels of happiness in our universe and consumer loyalty, Nordstrom was a name that we used to bring to the table. Its consumer happiness levels were really high, really exceeding peers. And it's interesting because we started to see a shift. Those Nordstrom happiness levels have dropped by about 2 points from their, peak heyday highs. It's about 70% positive, which may not sound significant, but Dillard's, a peer, now is on equal playing field. Those consumer happiness levels are exactly the same. And so it's kind of losing that edge that it once had. It's losing the things that it was once known for. And I think that's an area where potentially new leadership could help kind of redirect the ship to, rejuvenate that brand, because that's probably the brightest spot and the most positive thing that Nordstrom has going for it, is that legacy brand, what people remember the experience of shopping with Nordstrom like. And whenever you look at qualitative mentions of tweets, we used to see mentions of people who would just applaud Nordstrom's customer service, talk about what a wonderful experience it was to shop in stores. And COVID kind of shifted everything. It killed that edge that Nordstrom used to have from a person-to-person basis. And we're seeing that Nordstrom is really lagging as it attempts to shift to that e-commerce and carry that superior customer service through, at least on the minds of consumers. One metric that we look at on the digital side of things is how much time consumers spend on Nordstrom's site. So, the more time consumers are spending shopping around on Nordstrom.com, the more likely they are to spend money, right? They're shopping around for more. And we've seen that average duration continue to slip. It's down by about 7% year over year. So I think that there's definitely room and places for improvement. And it's something that Nordstrom has proven that it's done before. It's just, can it turn that ship around and get back to what it's known for?
So Megan, when, it seems like the resilience of the upper end consumer right now is still doing well. You mentioned that happiness levels have come down here. Is this due to does your data reflect anything about inflationary pressures? Because we see a lot of consumers trading down in this type of environment. Is that one of the things, if inflation continues to cool, that might actually provide better data, for Nordstrom moving forward?
Yeah, there are a couple of metrics that we're watching, especially for Nordstrom's Nordstrom Rack brand. And one of those is deal discovery. Even Nordstrom called out that a lot of consumers, they had to mark down a lot of inventory, and consumers were more intentional with their buying. They were hunting around for deals in a lower price point. Well, so far, we haven't seen any resolution in those deal discovery mentions. Actually, they're near all-time highs right now. And we also have signs, just when we listen for consumers who are talking about, depleting their savings account and maxing out credit cards, those also remain really high right now. So I think that those are some headwinds that Nordstrom has. But certainly, as those headwinds kind of ease, and as hopefully, inflation comes down and consumers kind of build up their, economic position again, that this will shift for Nordstrom. We just aren't seeing signs that it's shifting yet. So we think that, there could still be some significant hurdles that the company has to overcome before things really turn around.
Yeah, they don't have earnings until early March here, Megan. If you guys did have an earnings score on this, what would it be?
So if earnings, like you said, they're in March, but right now our score is a negative 33. So that's bearish for Nordstrom. We'll see how things go. We'll see if that continues through the next month. But so far it looks like it's likely that it'll still be a bearish outlook unless something drastically changes.
All right. Bearish outlook going against the activist investor. I like it. All right, Megan, have a great weekend.
Thanks, guys. You too.
All right. That's Megan Brantley, Vice President of Research at LikeFolio, breaking down the Nordstrom data.